97 Communications approval to participate in UPI.
There, 22,070 is where the Nifty is at. The Sensex is at about 72,822.
We are now further building on that strategic commercial collaboration with Eris Life Sciences.
Top two are some unknown entities there, one of which is Future Gaming and Hotel Services.
The tests essentially talk about how long it will take for any particular mutual fund scheme to liquidate.
Once again, the advance decline ratio is under pressure.
Liquidity numbers are out, and of course funds are very liquid because we've always been very careful about liquidity.
The petitioners are arguing that using this unique serial number, one can associate individual bonds to individual parties.
It is another day where we're seeing pretty significant cuts come through.
Well, that is the day so far, and that gets us finally to this last edition of the week of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon.
Thank God it's Friday, guys. I think I can say that for all of us.
Well, it looked at about 215 that the markets are going to climb higher and higher and have a pretty decent finish. But now again, there's been a bit of a slip in the last 10 minutes.
Well, guys, I'll tell you what. There's the birthday girl who's on the screen as well. Next week is the birthday, so this weekend I believe she's throwing a big bash, and then for us in the next week itself. What's your Rima?
Well, I heard it's Navneet's birthday before mine.
There's a bash.
So we are getting treats. Either way, we're the ones getting the treats, so we're looking forward to it.
That's right back at you, Nigel.
Absolutely. The treat's on me on that one. But guys, today the Bulls will feel quite good.
We're enjoying it, yeah, absolutely. Either ways.
but not too bad a session, right, guys? At around 11:30 odd, it was looking like maybe the Bulls are going to be taking a bit of a whack today. But there has been some improvement. Breadth of the market not too bad. Seen a bit of a defense of that 50 DMA on the Nifty itself. And the Nifty bank is back closer to around the 50 DMA. So par for the course, I would say. The Bulls will want to play out a couple of sessions and then hope they can make a fight back and head towards all those all-time highs. What's it?
A bit of an up and down kind of a session, actually down and up, maybe the better kind of description. And actually, the small cap index, we should put that up and begin there, because that is, I think that was in the green, back in the green. It was down seriously at one point, 1.7, 1.8% lower, and the small cap index is now flattened out, absolutely. So 3 points, so practically back there. So that's actually good to see. And this is basically where the problem has been, the bulk of the selling has been. It's not the Nifty, not the Bank Nifty. It's been small caps, and the recovery there is a good way to close the session out if we do that. Nifty is also, by the way, recovered. The last I checked, about 100 points from the day's lowest point. Okay, it's come off a little bit, which means about 75 points. Still off the lows on the Nifty as well. And PSU stocks, that continues to be a bit under pressure, but that perhaps also is because, the weight of OMCs in some of these indices, right? And OMCs have given up, have also pulled back. I mean, HPCL, for example, at one point was down 11%. It's recovered about 5% from the day's lowest level. So overall, I mean, there is a bit of a lift which one is seeing, and hopefully maybe that picks up a little bit over the next 60 minutes. Rima.
Hi, but just to put the tally for the week on board right now, the Nifty is down close to about 2% this week. The mid-cap index is down 4.5%. The small-cap index is down nearly 6%. And this is despite the recovery that we've seen intraday. The small-cap index is down 6%. And the CPSC index, that continues to remain under pressure. And it's 10% gone on that for the week.
Yeah, absolutely. And Rima, you hit the nail on the head, because those were the stats that I was looking at as well. Because for me, the biggest question is that at the end of this week, you've got a 5% drawdown around the mid-cap index, about 7% of a cut on the small cap, and about 8% on the micro cap. Are we done, or are we not yet done? And whether this will continue to be a volatile, choppy ride as we go forward, that's really the biggest question for me. And the second question is that even for the Nifty, today, of course, you have ITC once again batting, but you don't have signs of very clear confidence in leadership, at least the way I've seen the tally play out through the course of the week. I mean, you have some of the other batsmen coming and rotating. One day it's an Infosys, one day it's an ITC, one particular day it's an HDFC Bank, but there is no consistent leadership that seems to be emerging right now. So I don't want to be bearish as we get into the weekend, Nigel, but I think these are still some legitimate concerns out there till we start getting stability, more sanity, and clear leadership by one or two or maybe a few sectors of the market.
Well, that's right. I think, the Bulls will be happy. At least you can play out these sessions. Sometimes, the pitch is moving around too much. There's too much of dew in the pitch, so you just want to play out a couple of sessions, hope for the pitch to, settle out a little bit, and then you would like to play your shots. I think that's sort of a scenario we are in right now. Because take a realty index. Things are looking beautiful out there, right? Everyone's talking about strong demand, price increases, everything looking good. But in the last few days, the biggest casualty actually has been the realty index. The last 1 week chart, if we pull up the realty index, you'll see there's been big selling out there. But in today's trading session, it's trying to claw its way back up. And even earlier today, you had Oberoi Realty that was down closer around 1.5%. Now that's trying to fight its way back. Godrej Properties as well. Now that's up closer around 2.5%. So some kind of bottom fishing is what we're seeing on some of these stocks after the kind of correction that we've seen on the index itself. But let's talk about the Nifty. Mitesh, good afternoon. Good to see you in. And now before we get into the weekend, what's your view about today's session, particularly on the Nifty and the Nifty Bank? The Nifty has defended the 50 DMA till now. Your take.
Good afternoon. So I think, level-wise, 21,900, 920 is coming into play. I had penciled in 21,950. It's nearly the same level. But I think, my only worry is that the structure is still negative on the daily charts, while on the intraday chart is getting close to oversold. So slight dilemma, whether we'll break this immediately or whether we'll have a bounce back and then eventually break it. For the time being, what we've done is we have taken, some profits off our position. Let's say about 30-40% of the short positions have been booked. And we also trailed the stop losses slightly tighter. But as I said, I think, my still bigger bias remains that there's a stronger possibility of us breaking below this 21,900 level and then, heading lower. So for the time being, trading with my short bias, I have right now one buy and one sell call. HDFC AMC, I think, that's given a good pullback and now it's trying to reverse after that pullback. That's a buy with a stop at about 37.50 and a target of 39.90 is what I'm looking at, or maybe around 4,000 is what I'm looking at. And Power Grid is something which I would recommend sell. Keep the stop just above levels of 267 and look for a target of roughly around 245 here.
Thank you very much for that, Mitesh. Let's move on and get to the details of the latest EV policy, which was announced by the government some time back. Parikshit joins in with the details. Parikshit.
Well, on the 7th of December last year, we had reported that the government is consulting top automakers, luxury car makers, even the likes of Tesla and VinFast on a new EV manufacturing policy, which would give incentives in the form of lower customs duties for 3 years for companies like Tesla and VinFast. Today, the Commerce Ministry has come out with this new EV manufacturing policy. It's been formally announced. Under this, companies that commit to manufacturing in India, making in India, with a minimum investment of 4,150 crores will be given a duty concession from 100% on fully built-up cars to 15% for a limited period of 3 years. Not more than 8,000 electric vehicles per year would be allowed to be imported by the company under this concessional policy. And at the end of 3 years, the company will have to begin manufacturing in India. They will have to achieve a localization or a domestic value addition level of 50% by 5 years. In case the minimum investment threshold of 4,150 crores is not met, or the domestic value addition criteria of 50% is not met in 5 years, then the bank guarantee, which is submitted by the company before applying for this policy, will be encashed by the government. It will be seized by the government. So clearly, this is a move to attract global players like Tesla and VinFast. The government has been in talks with Tesla and VinFast for a very long time now. The Prime Minister has met Elon Musk last year during his visit to the United States. Piyush Goyal, the Commerce Minister, had also visited the plant of Tesla in the US very, very recently. And the talks have been happening at the level of the Prime Minister's office, at the level of the Ministry of Commerce and the Ministry of Heavy Industries. This entire initiative has been driven by the Commerce Minister and also the DPIIT Department of Ministry of Commerce over the last few weeks or so. Many companies in the last few weeks, such as Tata Motors, also Mahindra, have been seeking a level playing field. They have been saying that if you are interested in India, make in India and compete with everyone. So let's see how Indian automakers react. But clearly, they were not in favor of such a policy. They were seeking a level playing field, saying that we've been investing in India for many years, and anyone who wants to enter India should enter on the same terms.
Thank you very much for that. So good news for consumers as the choice goes up, but perhaps there could be a hit on the likes of Tata Motors and Mahindra. Prakash Diwan is now with us. Prakash, you want to weigh in on this policy and what Parikshit had to share?
So, Rima, this is definitely very interesting. Deepens the EV space for us, which has been fairly shallow, given the fact that most of the OEMs have probably been testing waters out, except for the likes of Tata Motors, which have really committed a lot of money and resources to this. What makes this interesting is that the EV ecosystem, which includes not just batteries, which is an obvious one, but a lot of the other things which players like Sona, Comstar and all does supply, those will start getting much more mature. So, it does a lot of spin-offs. The deep down effects are more in job creation, ancillarization of a very different level, because $500 million is quite a bit of fresh investment, and we've not had some greenfield investment in the auto space for a long time. So this definitely is very positive. And as you said, for the consumer, it gives you an option to even go into something which is best of breed in terms of EVs, even in the premium segment. So, you'll probably see an impact, negative impact, not so much on Tata Motors, because the price points are very different from what a Tesla would look at. But it'll probably impact the luxury cars, the BMWs and the Mercs of the world. So that's where things could change. So, but definitely very interesting development. We'll look forward to the developments as they unfold.
Okay, that is as far as some of the automakers are concerned and the EV policy as that plays out. Prakash, hi, good afternoon. Stay on. We also want to talk about the other big story of the day, and that's really oil marketing companies and what has been going on. Most of the stocks obviously have been trading with losses. This after that 2 rupee fuel price cut was announced last evening. Now, this was widely anticipated. There was a lot of chatter about pre-poll, perhaps political maneuvers coming in. Sonal is here with the details. Sonal, this has been such a hot debate on the street anyway, right? OMC is still a buy or not a buy. Now you have the 2 rupee cut coming in. So what's the verdict?
Well, this street is split actually. While it was expected, as you pointed out, it is much lower than what the street was fearing, especially whatever happened with the LPG price cut. There was a possibility that the CGD price cut also came by because of the government. But yes, this has come by, and a 2 rupee litre per cut will have an impact on margins. However, Morgan Stanley goes ahead to say that the implied integrated fuel margins, despite this cut, will be 30% above the average. The refining segment also continues to be very strong. So they see that this will not have a major impact. What CNSA says that the announcement of a 2% cut in retail price will lead to de-rating of the stocks. They continue to maintain their sell, and they downgraded these stocks in January. Citi says while their cut could hurt the medium-term sentiment because there would be a margin hit, they are viewing any meaningful pullback as a medium-term buying opportunity because they still think that the valuations are reasonable and there are growth triggers going forward. MK says a 2 rupee litre per cut on OMCs will hit the margins by 1.6 to 1.7 rupees per litre, which is on an average. But they also think that it would be a buying opportunity if these stocks fall a lot. But the risk going forward will be an increase in crude oil prices. They have been increasing in last couple of trading sessions, so that would be a big risk. But yes, this is a big overhang that has been done away with. But the tick that we are seeing today is something which is because of the impact of the margin cut that has come by. HPCL tends to be seeing the biggest negative because they have the highest exposure to marketing segment.
Okay.
Okay, got that. Thanks, Sonal, for the analysis there. Let me toss that back to Prakash. So, Prakash, now what do you think? It's happened, but it's a 2 rupee cut. It's not like a 5 rupee slide. So, therefore, the debate gets only more intense. There are those who say that these are, very high levels of projected sustained margins. And there are those who are saying that, this is actually not as bad as feared. So, maybe still a good call. Which camp are you in?
Oh, absolutely, Subhi. So I'm happy Sonal started off by saying the street is split on this. And I am from the camp that believes that any softness in prices because of this reaction is an opportunity for people to buy. Look at where they stand in terms of margins. It's been so many months that you didn't have this, price cut. And they've been sitting pretty on those margins. And what's interesting is that as crude prices go up, the GRMs in absolute terms will also start helping them. So it's not that, you know, 1 rupee per liter is going to be very impactful, 1.6, 1.7, whatever the estimates are. But you also make up quite a bit of that from the GRM enhancement. So there is very clear set-off, which means that they're going to be fairly insulated in spite of this 2 rupee hike, which, as you rightly said, is very minuscule. The other thing is, you know, look at where they trade. I mean, IOC, for example, which is what I like because it has refining as a significant contributor to its revenues. At this 2,25,000 crore market cap, it's not even 5 times price earning on a trailing basis. Okay, so if things were to continue looking up and GRMs continue to go up, revenue keeps on getting maintained at this level, I don't see any reason why you would really doubt their ability to still create value. And the asset base that they've created, and if you know any optionality in terms of hydrogen, EV charging infrastructure, there's so much that's still kind of, you know, in the works. I would not believe that these are coming crashing down. In fact, it's a great opportunity because of the market sentiment today. Had this news come in about a week back, so we probably wouldn't have had any negative reaction on these stocks. But if you're looking at accumulating something which is PSU, something which is irreplaceable and linked to the growth of the economy, you actually could probably do that today with IOC and all. So I'm not too bullish on HPCL for various reasons. As I said, it's more marketing dependent, less refining. But IOC probably makes the cut for sure in this whole pack.
Now, Prakash, I totally take your point. This market sentiment and positioning is such a huge thing, guys. He's right. Like, had it not been for this mid-cap correction, for all you know, these stocks would have been rallying, thinking the cut is less than feared. Yeah. But, you know, that's the nature of the market. Nigel, over to you.
Well, that's right. You know, I just want to point out a few stocks on the broader markets as well, because some of those stocks that got clobbered in this week, they're bouncing back. Pull up Hoodco. The intraday chart should come up for you in the screen. That stock has moved up. There was some regulatory action against South Indian Bank, but pull up the intraday chart out there. That stock as well is seeing a good rebound. And from the railway space, you have Ircon that's seen a bit of a bounce. So a few stocks, you know, that have got a hard knock this week. You know, some of them down between 8 to around 10%. They are bouncing back as we speak. But the one that's been a big underperformer over the recent past has been Paytm. The stock, though, is up in today's trading session after the National Payments Corporation of India approved Paytm owner 197 Communications participation as the third-party UPI application provider. Ritu is here to tell us more about that and also what a brokerage is making of the same. Ritu.
Well, NPCI has granted 197 Communications approval to participate in UPI as a third-party payment application provider under a multi-bank model just ahead of today's deadline for Paytm Payments Bank to wind down its banking activities. There are 4 banks that will act as payment service providers: Axis Bank, Yes Bank, HDFC Bank and State Bank of India. And separately, NPCI has also said that Yes Bank will be acting as the merchant acquiring bank for existing and new UPI merchants for 197. For Yes Bank, this presents a significant benefit. To begin with, we understand that Yes Bank is likely to maintain the escrow account for Paytm's online merchants along with Axis Bank. Apart from this, Yes Bank will exclusively manage the escrow account for Paytm's offline merchants is what we understand. So 1, it is going to earn fees for settling the transactions. Number 2, it gets access to the float in these merchant accounts, which can be then deployed to generate additional income. And number 3, the bigger benefit of being able to cross-sell financial products like loans to these merchants. So in a way, Yes Bank is a huge beneficiary from RBI's action against Paytm Payment Bank. For Paytm, with all of this churn, customer retention, that is going to be the key going ahead. Now, Morgan Stanley says it will watch out for updated commercials as Paytm Payment Bank's business moves to other banks. UBS says that in the base case, there's a 15 to 20% churn it expects in the merchants and customer base of Paytm, along with some loss in GMV share. It expects Paytm's share in digital payments to come down to 17% in FY25 from 25% before the RBI action and a 2% decline in revenues. Jefferies sees an 8 to 15% hit to payment value and app usage and expects a quantum of impact on the payment business to be limited to sub 20% from the January levels.
Okay, all right. Thanks a lot for that, Ritu. Prakash, what do you make of it?
So, you know, all these numbers aside, this conjecture aside on how it can continue doing the, you know, the UPI part, I think it's still not going to be yielding any revenue to them. This is a business that in the first place was always not profitable, and hence they had to set up the payment bank and start looking at other optionalities on the lending side. So once the bank is out, which seems very clearly imminent, I don't see what's the revenue model that Paytm would win. So this is just like some sort of a respite, that at least the customers will not have to kind of en masse migrate out of the Paytm platform and start scouring for something else. But to the company, I haven't understood what's the benefit except for this respite or a closure, which is probably soft landing of sorts to this entire saga. I still don't like that idea of buying into it just because there's some respite in a business that doesn't make money. So the money-making business is out, and that's the reality that you need to price into the stock price as well.
Okay, all right, Prakash, we'll leave it on that note for today. Thank you very much for joining in. You have a good weekend, and we look forward to connecting again soon. Well, the news is it's 120 down on the Nifty, 126.27 actually right now. The mid-cap index is down just about 0.3%. Let's see if we'll get a close above 22,000 or not. I think we'll have that answer in about half an hour. Take a break on that note. We'll come back with a lot more on the other side, and we'll get a conversation going with Rajat Rajgaria, MD and CEO, Institutional Equities at Motilal Oswal Financial Services.
Okay, nice looking screen, decent bounce, 100 points lower is all that the Nifty is trading in terms of the cuts. With 22,027 is where we are at 100 points off the lows of the day. Now, this is an interesting time to carry on our next conversation. And this is from the 9th Motilal Oswal India Annual India Ideation Conference, which basically kicks off this coming Monday. I mean, the conference at Motilal, the Ideation Conference will run over 2 days, Monday and Tuesday. And ahead of that, we have Rajat Rajgaria, Managing Director, CEO, Institutional Equities at Motilal Oswal Financial Services with us. Rajat, it's always great to see you here on the channel. Appreciate your time on CNBC-TV18. And, typically, from what I understand, Rajat, this is a conference where you ideate and look at sort of picking mid-caps, small caps. I mean, that's the part of the market where this ideation is focused on. It's interesting. It's an interesting time to do that because we've seen some sharp sell-offs in that space, which perhaps gives an opportunity now to look at more reasonable levels. I mean, great stories, but better prices. So just sort of start us off there in terms of how you're looking at this, given the market context.
Hi Prashant, thank you for having me on the channel. So this is our 9th year of doing this ideation conference, and this conference typically focuses on companies with more bias towards mid and the small caps. And typically every year, or this year, we have almost close to 75 plus companies who would be engaging with investors over a 2-day period. We have a very good level of interaction or lineup of investors, for these 75 plus companies. And you rightly mentioned that, whenever we plan the events, we don't take view on the markets. The conference is a platform where businesses are being discussed. Stocks can always be up and down. When they are up, they are exciting. When they are down, they are interesting. As you rightly mentioned that this is an interesting time because we think that whatever has happened in the market in the last couple of weeks, and more so in the mid and the small cap space, right? Businesses are only getting better and poised for a better growth. But what is working in favor of the investors is that the entry price points for a lot of these names are only getting better. So I think this correction from a conference point of view just helps investors that wherever you build more conviction on the businesses, on the stories, your price points today are a lot better than what they would have been a couple of weeks back.
Rajat, afternoon. So out of these 75 plus companies that you're featuring, how many of them are new companies where Motilal Oswal doesn't have coverage right now? Just trying to understand how you're expanding the pool of your portfolio companies. And if you can also provide a tilt in terms of, how many from the finance, how many from the real estate or the ancillary, IT, etc.
So, because it's a ideation conference, mid and small cap, there is no sector bias. I can tell you that this covers almost every sector that one can think about, be it financials. Within financials also, lenders, capital market, intermediaries, you have auto comms, you have infrastructure, manufacturing, technology, healthcare. Check about any sector because we focus more on individual companies and ideas. There is no sector bias. From a coverage point of view, I must share that a large number of the companies in this conference would be the ones where we do not have a rating right now. And that is the theme of bringing this conference every year, that there are a lot of the names, a lot of the companies which may not be well covered, right? But they are companies which are worth meeting, growing well, growing big. And we think this is a good platform for investors to get well versed with those names.
Rajat, hi, good afternoon. So while obviously this is all bottom up and it's all very specific to individual companies, promoters, etc., but can you give us any broad trends in terms of your areas of interest where you're looking very carefully with that magnifying lens? Because in the recent past, pockets where there was, let's say, EMS, electronics manufacturing, or even defense, or, we've seen the whole PSU move play out. So a lot of these places have already seen a very, very hectic rally, so to speak. And that's where the correction is also coming in. So how would you tie that in, and which are the specific themes that still hold a lot of interest for you?
Yeah. So, when I was on your channel a few months back, we discussed in details about several themes. I must share that all those themes remain intact. While they have rallied a lot from there and they have corrected also in the last few weeks, I'll come to the correction later on. But to those themes, I just want to reiterate that our themes largely remain unchanged. And if I can sum up those, we have been a big bulls on the entire travel and tourism that we have been running for the last 2-3 years. I think this space is only going to get larger, more organized, and more wealth creator in the markets. Second, this entire financialization of savings, which we have been seeing expanding through multiple players in capital markets, not just brokers, not just AMCs, not just other intermediaries. Some of these may have seen again good corrections in the last couple of weeks. But let me tell you, the broader story next 1, 3, 5 years remains as firm as they were when we last spoke. Third, I think manufacturing is yet to fire. We can definitely see stocks that have rallied very well in the last 1 year, but I think the best is ahead for this space. Coming on the correction, I think we are right now quite focused on how much stocks have corrected in the last 1 week or so. But I think whenever stocks go up 2x, 3x, some bit of correction is always good. I just wish that you see valuations becoming little more reasonable for the stories or the themes that you want to play. And this phase of price correction along with some time correction will allow investors to position well.
Okay, all right. Hi, Rajat. Request just to hold on to that thought. We have some comments coming in from the IOC CMD, which is coming in from my colleague Sapna. She's saying that, in fact, the LPG, petrol and diesel price cuts are unlikely to impact the bottom lines out there. So, I think we'll get some of those comments that are flashed for you on the screen. For the time being, the stocks are under pressure. But just keep an eye out on IOC. We have some comments that are coming in there, which our ticker team will put out for you on the screen as well. But Rajat, hi, good afternoon. Nigel on this side. And I want to compliment you actually on 2 calls. One is on the PSU theme that you all have been quite bullish on. I think the preference was PSU Banks in comparison to the private banks. And the other one was the travel and tourism theme that you were talking about. I think Indian hotels was another big pick. As of now, which way would you tilt? That PSU Bank theme worked out well, but at current reckoning, would it still be PSU Banks over private sector banks? And from the travel and tourism theme, are the hotels the main play?
Well, I think almost all the themes that we spoke last, right, they still remain to be our favorites. I think PSU Banks, this is a kind of a cycle for this PSU Banks that at least I have not seen in the last 20-25 years. You are staring at a growth cycle with a pristine asset quality. And despite the rally that you have seen, on an average, most of the top PSU banks are still around closer to 1.1 time book. I think there's still a lot of money to be made for people who can hold them for the next 2-3 years. Travel and tourism, I think hotels is the one where the big brands are present and they are going to leverage and improve their ROEs a lot. You have aviation, but the play is limited just to one company. Plus, I think over the coming times, you will see lot more listings coming into this travel and tourism. Whenever a sector becomes big, in this market, in this cycle, you are seeing options being played out through multiple new IPOs and multiple larger floats. I think in the coming months, coming years, you will see this space getting very large for investors to put more money in.
Okay, no, absolutely. The other space is capital market plays, right, Rajat? Again, something that you guys have sort of spoken about vocally and espoused your liking for that space. There are so many kinds of capital market plays, not just brokers who were listed earlier. Now we've got, CAMs, you've got, of course, broking companies, you've got wealth management companies, you've got an exchange, and so on and so forth. What's the best play? I mean, capital markets will continue to grow and grow. It's, in a way, secular. But what is the best way to play this, in your opinion?
Well, the theme is common for all the capital market players. You have 15 crore demat accounts growing rapidly. We still see a long runway of growth. The SIP flows, which currently stands at 19,000 crores, in our view, over a period of time will keep compounding. So I think be it broker, be it exchanges, be it DP, be it AMCs, you just need to, I think the two important things is bet on the leader in these spaces and just make sure that your entry price, entry valuation, which this correction is making a lot more favorable, right? You tend to benefit from it. But this is again a space, Prashant, where over the next 1-2 years, lot more listings will happen, lot more plays will come up. This is a space which is only going to get very large in a $4 to $5 trillion market cap, which is poised to double over the next 6-7 years, right? The plays are going to be very large in capital markets. So I think an early positioning into some of the market leaders will help you compound as these companies compound.
You know, one thing I left out is mutual funds. Those are the biggest guys there in that space. But there's no preference. I mean, more durable, more kind of steady, less affected by regulation as they come along. I mean, is there a preference that you'd go with? The kind of where in the capital market value chain? I mean, is there a food chain here? Something sits on top, and so yeah, go on.
Yeah, no, sorry. So, in the entire capital market space, in each segment, you don't have too many players also. In AMC, maybe you have 4 players listed right now, but a lot more listings will happen in the next 2 years. Brokerages also, you have just 3 or 4 players who are listed. Lot more should happen. So I think the theme itself is so powerful. You can pick your own bet, but important is wherever there is a market leader, and especially if in segments where suppose you have duopoly or 3-player market, the share of the growth pie for the top 1 or 2 players can be very sizable. They will get a premium multiple. One just needs to keep finding to ensure that your entry price or your buying valuation is very reasonable.
Rajat, are you a bit worried about the recent regulatory action on particular NBFCs hurting the sentiment for the entire NBFC sector? Will this extend to other, companies in that area? Is that a bit of a worry for investors now? That let's wait it out to see what if more regulatory action is going to come before they pump in more money.
Well, there are two things. One is short term. People definitely try to extrapolate from one space to another, and that is fair also to do. But I think second thing is whenever regulations come, the regulator intent is always to make the underlying trend, the underlying business stronger, right? And we have seen over the last 1 to 2 decades, the lending business, be it banks or be it NBFCs, the regulations have always made the sector more stronger. I think investors in the long term will actually appreciate that if the growth is more quality driven, right? The valuations of the people who are valuations of the companies who are going to benefit from this will actually expand rather than contract. Short term, of course, you will have noises, but I think long term, the players who are doing the businesses in the best regulated quality manner, their multiples will only expand.
Thank you very much for that, Rajat. We look forward to getting, the snippets of your, some of the key takeaways that you've had post the ideation conference. Have a good one. By the way, the Nifty is now back. The Nifty slipped close to about 100 odd points, but there has been a bit of a recovery in the last 10-15 minutes. We'll slip into a very short break. We'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our experts.
Welcome back. You're tuned in to Closing Bell. You're on CNBC-TV18 and we're coming to you live from the Motilal Oswal newsroom here in CNBC. Well, keep an eye out on the markets. You know, one of the reasons that the markets has moved down a little bit in the last few minutes is because ITC has slipped. You know, that stock was holding the gain of around 1%, so that's moved down. And Mahindra & Mahindra now is down closer to around 5% as we speak. So clearly some profit taking out there. This news that Tesla could possibly be making its way into the markets has been negative both for Tata Motors and Mahindra & Mahindra. Intraday chart is telling you the picture out there. But as promised, 3 p.m. Nimesh joins us to tell us what he's picking up in industry chatter. Nimesh.
Well, Angela, a bit surprising today the way the markets have given up yesterday's whole gain. So choppy and volatile as well. But again, from a flow perspective, there are 3 big events which will mean there will be a very large gross figure. The FTSE rebalancing, that's close to $1.8 billion. There is Bharat 22 rebal as well as the Sensex rebalancing. So net altogether, I'm told there will be $3 billion of gross inflow. So that will show up big time in the institutional numbers today. So need to exclude that for a genuine figuring out as to how much the institutional active has been in today's market. So I wouldn't count too much into the flows in today's market. I guess what is more surprising is the fall in the PSU stocks today. Well, of course, the OMCs were under pressure, and that's understandably so because of the fuel price cut. It was anticipated, but now that has come a bit of profit booking in that space. But across the board, there is a bit of profit booking now in the PSU market. So that's been a bit of a surprising factor to me as well in today's market. I guess from a technical point of view, 21,800 seems to be the next big support level to watch out for. If that's been taken care of, maybe you'll not see a big sell-off from those levels. So that's the overall feedback. But as I said again, today's number is not something to watch out for, but a bit of surprising the way the PSUs have given up today.
Okay, let's talk about individual stock then, Nimesh. What are you picking up?
So in terms of individual names, the first stock on my list today is Ambuja Cements. That's gaining in counts today, good volumes as well. I understand some bit of institutional interest is back in that particular stock. So expect high delivery volumes today in that particular stock. The second name is Delivery. The last few days, there has been some bit of institutional interest back. Today, I understand there is price limit buying orders with some large FI desk as far as delivery is concerned. The third, a couple of stocks where there is selling pressure, both Piramal Pharma as well as RK Forging, both cash stocks. And in both the names, I understand there is significant delivery-based selling in those both names. And the last one is PG Electroplast. That stock is locked at 10% upper circuit. Remember, in Y2D, the stock is corrected almost 30%. And even yesterday, there was a sharp sell-off. But looks like the domestic selling pressure is largely over now. A couple of mutual funds and some PMS were active sellers. That seems to be cleaned out, and hence a big up move in today's market.
Bye. Nimesh, thanks very much for that. That's essentially the list of stocks that Nimesh is telling us to watch out for, and we'll do that. And always an interesting one. Now, here's the bite, right? The sound bite that we wanted to play out for you. IOC, the country's largest oil marketing company, the CMD there, Mr. Vaidya, is saying that the fuel price cut will not impact the company's bottom line, at least in the next quarter. I think that's what he said. But listen in for yourself.
We should not have much of impact on the bottom line. That's the question number one. And secondly, when the stocks were doing extremely well, you must have seen for the last few months. So now they are coming down. So I think that's the way the market plays.
That's IOC for you. Mitesh is back with us for a few last calls for the week. Mitesh, what do you have for us?
So I have BTST on LTTS. I've been maintaining a positive stance on IT names, and that's where some strength is. So BTST here with the stop below 53.80 for targets of 54.65. And M&M, I think Prashant just flagged it off. There's some negative news flow. The chart pattern also suggests more correction. STVT here with the stop at about 18.15 for targets of 17.75.
LTTS today is higher because they've signed a $100 million deal with the government of Maharashtra for cybersecurity, which will be spread over the next 5 years. And they told us in a conversation that today cybersecurity is a very small portion of their portfolio, just about $10 million. But over the next few years, they expect this to be about $100 million annual revenue run rate. But that's LTTS for you, up 3% in an otherwise muted market for you. Mutual funds now have started releasing the results of SEBI's stress test, with industry-wide disclosures likely to come, and more of them come in by the end of the day. Surbhi is now standing by at the big wall with the details. Surbhi.
Well, it is indeed a whole new paradigm for investors looking to invest in mid and small cap funds. prodded by the market regulator, mutual funds have started releasing the results of stress tests that tell investors how quickly they can expect to get their money back in case of market volatility and heavy redemption pressure. Not just liquidity, mutual funds will also be making additional important disclosures about portfolio concentration, which will give investors another critical data point that must be considered before making an investment decision. Now, this move towards more disclosures comes after the surge of inflows that we saw in mid and small cap funds over the last year. And the numbers are there for you. October was a high. Small cap funds drew in close to 4,500 crores in the month of October. Now, the results of these tests will actually reveal how long it will take for a mid or small cap mutual fund scheme to liquidate first 25% of its portfolio and then 50% of the portfolio in case it gets heavy redemptions. Now, a stress scenario is being defined as one when a mutual fund can account for only 10% of market volumes, but when trading turnover is actually 3 times the normal. Now, let's analyze some of the results, starting with mid-cap funds. These were the initial ones that came in, so I was looking at them. So these are the 2 tables we must consider. The number of days it will take for these funds to liquidate their portfolio. Let's take a case of a 50% liquidation. Now, we can see for a fund like Edelweiss, which is a relatively small-sized fund, it will only take 2 days to liquidate. For Aditya Birla Sun Life's small-cap fund, the number is 4 days. If you go down and look at the larger funds, for instance, Axis, where the AUM size is in excess of 25,000 crores, then the number of days it will take to liquidate the fund, that is the mid-cap fund, is 12. That's 50% of liquidation. Now, let's look at the small-cap space and see what the numbers are looking like for some of the small-cap funds. Once again here, the smaller size funds, whether it's Edelweiss, which is about 3,000 crores, or the Motilal fund, the liquidation period is smaller, just about 3 days or so. But the moment the size gets larger, it's but natural that the time taken to liquidate will be more. Look at Axis. 19,000 crores of AUM and 28 days for liquidation of 50% of the portfolio. And likewise for Quant, it's 22 days where the AUM size is over 17,200 crores. Now let me come to some of the additional important disclosures which MFs will make. The first of these is portfolio concentration. Mutual funds will now be revealing the percentage of AUM held by the fund's top 10 investors. Higher the concentration, higher the risk in case of any of the big investors decide to liquidate their holdings. So some of the examples are there for you. In this case, Motilal has higher concentration with 12% of top 10 clients. Mutual funds will also be disclosing the concentration with respect to market capitalization. That is how much of the fund's portfolio is large cap, how much is mid caps, and how much is small caps. A high small cap concentration generally spells lower liquidity versus a mid cap or a large cap biased fund, with liquidity increasing as you, of course, go up the market cap ladder. So just, talking about concentration over here, we can see that in this case, if you look at some of the funds, then the large cap exposure is pretty high for the Quant small cap fund. Within the small cap fund, it has a large degree of large cap exposure, whereas some of the other funds, the small cap exposure, for instance, for the Aditya Birla small cap fund is pretty high. 82% of the fund is actually pure small caps. So along with these disclosures, MFs will continue to report volatility measures such as standard deviation and portfolio beta. Investors can also assess the overall portfolio valuation via the trailing 12-month PE, which will be disclosed along with the PE of the fund's benchmark index. Experts advise evaluating all these parameters together: liquidity, portfolio concentration, portfolio volatility, and valuations before taking an investment call.
All right, so interesting sort of detail, and I think one can safely say that the stress tests have not caused any more stress, and there's more information for everyone to analyze, as you said. And I think on a regular basis we'll get this information, I guess, and we'll analyze this. We'll take a quick commercial break here. More on markets on the other side. We have, I think, Hemang Jani also joining in just a bit from now. Stay with us.
Welcome back. Keep an eye out on the screen. A few stocks are flying away. Nava Limited, just take a look at that stock. It's burst up in the last few minutes, and Honeywell is the other stock. So keep an eye out on a couple of stocks. They're taking off in the last few minutes or so. Nava Limited as well as Honeywell. But let's focus on the cement space. Shree Cement, that stock has been upgraded by Citi. They've upgraded it from neutral to buy with a target price of 30,000 rupees. Why is that? Well, they're highlighting the fact that Shree Cement has underperformed UltraTech Cement, if you look at it in the last 1 year or so, by close to around 39%. And now they're closing in the valuation gap with UltraTech Cement. So earlier, it used to trade at a big premium, but now it trades at around 16.8 times its forward earnings on an EV per EBITDA basis, which is actually a bit of a discount in comparison to UltraTech Cement. And they're highlighting that in the past, it used to trade at a 30% premium to UltraTech Cement. Even on an EV per ton basis, it trades at a discount. Those numbers come up for you on the screen. And they're saying both of them are going to deliver similar volume growth as well as EBITDA per ton. So that's why they have gone ahead and upgraded the stock. But they are waiting clarity, though, on what the income tax department has to say with regard to those searches that were conducted. They are saying that, in fact, as of now, the quantum suggests a 4 to 5% impact on the market capitalization. Put all this together, Citi is turning a little bit positive on Shree Cement. Hemang Jani is with us. Hi, Hemang. Good afternoon. Good to see you in. What's your view on Shree Cement? Do you think the worst is in the price? The stock has underperformed UltraTech big time in the last 1 year.
Good afternoon. It's mixed news come through the, if you look at the pricing pattern, in many pockets, we've seen price cuts being, taken by the companies. Also, we are seeing the crude price go up, and we don't know how long it will last, but typically it may have some impact on the margins. And I think that while Shree Cement in terms of valuations is cheaper, but that's been the case, all across when you compare it with UltraTech. So I don't think that the valuation differential is the only reason why you would want to buy Shree Cement. I think typically, if you see a pre-election rally, some of the cement companies tend to do well. And from that perspective, I think UltraTech and JK Lakshmi are the names that we are comfortable with for let's say, a medium to long-term perspective.
Hemang, afternoon. What about a stock like Zomato? It's up 5% as Zepto has introduced a platform fee of about 2 rupees. At least they're testing it out. As of now, Zomato's quick commerce delivery, Blinkit has not introduced it, but there is always a possibility that when, its competitor introduces, even Blinkit will follow, and it will just hasten the market's expectation of, the profitability improving for Zomato. Is the stock looking attractive because the execution has improved quite a bit in terms of, the execution and therefore leading to stronger financials?
Certainly, yes, Rima. I think given the way Blinkit has gone about adding new categories to its platform, we do think that it will improve the overall AOV in days and quarters to come by. Also, the fact that now financially the company is doing much better. They have a headroom to really do certain experiments, add many formats and categories. And we do think that within the new age platform companies, Zomato surely stands out. Quarterly numbers have been quite encouraging. So we do have a positive view on Zomato, the price target of 190.
Okay, those are some of the stocks in focus today. By the way, as we are sort of closing out, interesting move in UPL. UPL is up about 3% on a day like this where it's been fairly topsy-turvy. UPL is now sitting pretty with this last half an hour gain that has come through. Hemang, before we wrap up for today, we've seen results from all of the chemical companies in the quarter gone by as well. Is there anything where you think that there are green shoots where now, because there's a lot of price correction that's happened, right, where prices are attractive, is there anything which deserves some fresh allocation now?
So everybody has been talking about the pricing being at the bottom. There are green shoots, but the numbers are telling you a completely different story. So I think given the way things are unfolding in China, it would be sensible to stay away from these companies because you just purely can't go by what managements are talking about. Within the the entire universe, I think SRF and to some extent Deepak Nitrite, these are the two better companies. But I think we are still away from a phase where we can say that valuations and pricing scenario is better.
Okay, by the way, take a look at this, right? The small cap index is in the green, right? 0.5%. So a quarter percent now. At 5-7 minutes back was up 0.5%. And you've got the other indices. The Nifty is down 0.5%. The Bank Nifty is down about 1/3%. So would you call this day a good day? I would say, I would call it a good day. In the sense, because the pain was in the broader market and the small caps are doing just fine. They are, big recovery, right? I mean, almost 2%, 2.5% recovery from the day's low. I think this would qualify as a pretty decent outcome, all told, by 3:30 today. So that's what we have. You know, we played. Sorry. Yeah.
The micro cap index as well, might I add. It's up 1% now, so it's flashing the most green on the screen compared to some of the others. So that small cap, which has turned positive, the micro cap index is now up 1%. It's cut its weekly loss from what was about an 8% loss to, I think, about 6.5%. Down. Yeah.
Absolutely, and that's looking even better, as Surabhi is saying. By the way, the oil marketing stocks have also recovered. That comment came in from, for example, IOC is recovered about, not much, but 4-5 rupees. And HP and BP have also actually recovered. BP is the one which has recovered the most, actually. IOC lesser so. The comment, of course, was made by the IOC chairman earlier on. HP is still under pressure by a little bit. Indiabulls Real Estate is another interesting name, right? It had fallen 200 or maybe fallen into 2 digits as well recently. I mean, 2 days back in that correction, but it's back at about 116, 117 rupees. Any thoughts on, I don't know if you track it or Hemang, any thoughts? Indiabulls Real Estate?
Not looked at this company, Prashant, but surely when you say that the midcap index is showing, some green or the micro cap category, that's definitely soothing to ears. I think retail investors would feel far more comfortable if we see some stability in the broader market.
I see. Okay, got that. I think we'll start sort of wrapping up things as well. Hemang, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18. And thanks for giving us that perspective. Well, just to sort of count down and sort of close this session out, 140 points lower, 22,000 is where we'll end. So neat, clean, even close, right? And off the lows by a decent bit as well. Nifty Bank will end lower. I think actually, let me just look at the weekly changes as well. So, flat down close, 0.6% for the day. For the week, 2%, 2.25% lower close. The Nifty Bank, 0.5% today, and for the week, almost 2.75% lower. Small cap index ends 0.25% higher, but 5% down for the week. And I think the mid cap index is also something similar, 0.5% lower, but for the week, about 4.75% loss coming through. So bad week, Friday to Friday for the broader markets, but today, especially on the small cap side, some relief, which continues.
So IT was the only sector to close up in the green for the entire week with a gain of 1%. And on the way down, apart from CPSC, Realty too took a big hit. Some of the notable losers today include the oil marketing companies, so HPCL, BPCL. Perhaps the EV SOPs have dented the sentiment around Tata Motors and Mahindra. So these stocks came under quite a bit of pressure, ending at the low point of the day. M&M down nearly 5%. L&T, NTPC were the other big drags, and on the way up, UPL, Bharti Airtel, HDFC Life. These were the star gainers.
Just very quickly mentioning some of the mid caps, some of the tier 2 banks have been huge movers today. Look at South Indian Bank; it's ended with a gain of 12%. Look at JNK Bank, 7.5% up on this one. Then you have PSUs as well, Bank of India, Union Bank. Some of the PSU names up 3-4-5%. So basically, the second rung of banks have had a good session today. And then PSUs in general, the buying that we saw yesterday, the pullback that we saw yesterday, continued on stocks like SJVN up 7%, Ircon 4.5%, RailTel, Hoodco. So PSUs also sort of pulling back from the brink, which is where we were earlier in the week. Well, with that, it is curtains on this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because coming up next is our Friday special, Smart Money.
Go.
Gulam. Why? What happened to Anand? Okay. Hi, Gulam. Can you hear me?
Yes, hi. I can hear you loud and clear. Can you hear me?
Okay, great. Yes, I can hear you loud and clear. Anand, what about you?
Hi, Sonia. I can hear you loud and clear. How are you doing?
Hi. Good, good. We are just starting in a minute.
Sure. Hi, Gulam.
Hi, Anand.
Just show me on the auto cue all the names once.